Alright everybody, this is going to be a quick video. This is going to be your daily brief for Friday, September 2nd, 2022. We're going to go over some financials real quick, and then we're going to hop into a couple stories, and then I got an announcement for you guys at the end there. So let's look at the dollar today. We saw the dollar press up even higher as discussed throughout the week. I would expect that we continue to see a rise here. What I am looking on the relative strength index just up here is that we could form a double top, and if that does confirm, then I would expect a pullback to the midpoint line here at the 50 on the RSI. So it's still to be determined. If we do end up printing that, it would be a bearish divergence, which should pull us right back down to this fib level at 106.614. Looking over at the 10-year yields, we've been talking about this a lot this week. The debt market is what we need to keep our eye on, in my opinion. When the whole house of cards goes, the debt market's going to be the biggest indicator, in my opinion. If this goes first, the whole thing's coming down, right? So we're looking for a deviation play here. We have our supply zone outlined in orange. We expect that if we did break out, it would likely be a deviation play, meaning that we'll pop up and we'll fall right back in. Based on if we lose this supply zone, then we'll understand if we're going to take a short down into this mid region or down to the demand zone here. So again, like we were talking about with the RSI, technically we made a higher high. So on the 10-year yields, we could surge higher. If we flip this supply zone into support, we can certainly press higher up into new highs, say 3.6%, which would just be insane. Markets will not react well to this, guarantee that. And the euro on a daily, we saw a surge across most markets this morning, up until the dollar began to pump. Of course, when the dollar started to pump, we saw a pullback across all markets, heavily in commodities, obviously, as well, equities. And we're seeing it here in Forex, where the euro has pulled back down into our higher time frame demand support there. So looking over at the S&P futures, at the beginning of the week, I told you guys if we lose this support level, we'll likely take a trip down to 3915. That's exactly what we did, and I expect that we would see a bounce in this region, which we did see this morning. But again, as the dollar surged, we saw it pull right back on other assets. So the S&P pulled back, and we're right back testing on that 3915 support, Fibonacci support. If we lose this, our next target would be down here in the demand, which I would look for a bounce there, possibly right back up to the 3915 fib level. We don't need to go over Bitcoin. It's been basically following what indexes are doing, S&P. It's just mirroring the same. Maybe we'll go over that on Sunday or so. But let's hop into a few stories here. This is just crazy, by the way. Get a load of this. White House taps who? John Podesta, of all people, to oversee clean energy spending. What the fuck? What the fuck? This is crazy, people. We'll see where this goes, but I would imagine there's going to be a bit of a public outcry against this. This is just wild. We'll see where it goes. Again, any articles I show you guys, pictures, videos, they're going to be listed in the description box below, so you guys can check those sources out yourself, share the stories, get the word out. Moving right along, Nord Stream 1, we saw that this was going to likely open today after being down for some maintenance, but it sounds like they might have found another leak. So what they're doing is halting all exports again through Nord Stream 1 here, which is the input for Eurozone gas. This is wild. So let's skim off the top here. The Russian energy major Gazprom extended the shutdown of gas flows through its key Nord Stream 1 pipeline to Germany on Friday evening, providing no time frame for a reopening. No time frame, people. It's going to get ugly. So if you guys remember, a little side story here, side observation. If you guys remember last fall, when Biden regime was out talking about a dark winter and mass deaths and crisis after crisis, and we didn't see much of that. If you guys followed me on Telegram back then, I had mentioned that I did not believe it was going to be that winter, but rather this winter that we're coming into right now. And it sure as hell is looking like that. The house of cards is ready to go. So I hope you guys are prepping up. You guys are getting real money, getting money out of the banks, getting silver, moving around some assets, and trying to protect yourselves, right? Food is insurance right there. It's insurance you can eat. Just definitely be stocking up every time you go to the store. It's easy to just grab a few extra things, right? That's how you can start up your supply. But if you're in Europe right now, I couldn't even begin to imagine. It's coming down hard. in my opinion, and I've always said it, I feel like Europe or Australia would go first. Australia kind of went first. Um, they're back and forth, but definitely the testing ground, in my opinion, over the last 2 years was Australia. Now we're seeing Europe, and I would believe within the next few weeks to 30 days tops, we see all of this trickle into our economy. Technically, we already are, but to the severity that we're seeing across the Eurozone right now, likely within 30 days here in the United States. Um, but the United States will be the last to fall, but it'll be the hardest to fall. That was my point. Let's look at the cyber threat. Again, we're just getting pelted constantly. And this isn't to say that we're not sending any out either, because guarantee you the input and output here is coming on both. But the input is pretty wild. So if you notice your internet slowed down, applications on AWS are slowed, this is likely the root cause of that, right? And again, I would expect that we see this ramp up as time goes on as well. So some good news here, to an extent, right? Day ahead electricity prices for tomorrow across the Eurozone. Look at this, guys, 383. Now, this is still high, right? This is still very high, but from the numbers we've seen over the last week and a half, 2 weeks, this is a decent pullback. I would imagine it's likely tied because of Gazprom and what's going on there. Perhaps also the anticipation of Nord Stream reopening, like it was supposed to today, given now that it's not going to. I think tomorrow we'll see a reflection of that decision in prices. But it's a little bit of relief, but not much. When you're seeing numbers like this, I think there comes a point where it just breaches such a level that it doesn't matter how high it goes, it's just not sustainable. Whether it's a private residence or a business, this is asinine, but it's going to head over here for sure. So a quick announcement, guys. I am going to be starting up what I want to do with these daily briefs. We're going to do it Monday through Friday. I'm going to take Saturdays off. And then Sunday, I want to do a live call-in show. And that live call-in show is going to be on our Telegram channel at Year Zero Report. We're going to shoot for 8 p.m. Pacific Standard Time. Everybody's welcome. No censored topics. Let's talk about it all. I definitely want to hear from you guys. So if you're in Europe, outside of the United States, if you're in the United States, you've observed something interesting you want to share. Maybe it's an odd weather event. It doesn't matter. I want to hear from you guys and see what you're thinking, see what you're prepping with, see what's going on. But I love you guys. We made it through the week. Enjoy this extended weekend we're going into here in the United States. Everybody else, enjoy your weekend. But love you guys. Stay prep. I'll see you guys on Sunday.